Hello, everyone, and welcome back to the SkyBridge Bitcoin Review. It's great to have the band back together this week. We've had a few guest appearances the last few weeks, but we finally have Brett and Anthony back on the SkyBridge Bitcoin Review again this week, which we're excited to discuss. What's been another interesting week in Bitcoin. Just a reminder, my name is John Darcy. I'm a Director of Business Development here at SkyBridge. I'm joined by Anthony Scaramucci, who's a founder and managing partner of SkyBridge, as well as Brett Messing, who's our president, chief operating officer, and our resident Bitcoin maximalist, as we like to say. Just a reminder, if it's your first time here on the SkyBridge Bitcoin Review, we like these to be very interactive. So there's a Q&A box at the bottom of your video screen on Zoom. Please post your questions. We want to make this sort of a crisp 30, 35 minutes going forward. So we want to make sure while we cover all the most important news in the world of Bitcoin, that we also answer your questions. So please post your questions there. But if you received the SALT Bitcoin newsletter, the SkyBridge Bitcoin newsletter, there was a lot to cover from this week. So we'll dive right into it. One thing we didn't talk about in the newsletter, actually, that I think is highly relevant, and I think Brett agrees with me on this one, is there was a difficulty adjustment as it relates to Bitcoin mining this week, which didn't get maybe as much fanfare as some of the other pieces of news. But Brett, could you start out by just explaining to everyone on this call that may or may not be familiar with what that difficulty adjustment means, what it is, and why it's significant?
Yeah, I think the difficulty adjustment is actually one of the more brilliant aspects of what Satoshi developed into Bitcoin. And what essentially it does is, the Bitcoin network is structured to produce a new block every 10 minutes. As more and more, and they solve math problems, as more computing power comes onto the network, the problems get solved more quickly. And so the blocks get issued faster than one every 10 minutes. So what has happened almost somewhat linearly over the last 10 years or so is that the difficulty adjustment goes up consistently as more and more computing power comes onto the network. As we know, and I'm sure we'll discuss some more, China has banned mining, and you've had essentially, about 50% of the computing power go offline.
You see, that's the Chinese. Okay, I'm going to call that right now on the Chinese Communist Party. Okay, trying to hurt Bitcoin, the Bitcoin ecosystem, the hash rate, and everything else, John. So
Yep.
While Brett's trying to figure that out, let me chime in here. As I think the point that Brett is making is that as the hash rate came down, the difficulty dropped by about 28%. Why is that important? Because it reduces the energy consumption necessary to mine the coins, and it also makes the coins, once again, more attractive from an arbitrage perspective in terms of what the prices are of the coins in the open market and what they can be mined for. And so you're back on, Brett, or are you still?
I am. Sorry about that.
Yeah, all right. I basically explained the hash rate calculation, but if you want to add to it, and I blamed your freezing on the Chinese Communist Party. So I just wanted to make sure. That was. We have to have. This is a blame game here at SkyBridge. I had to blame it on somebody. I think he's locked. I think you locked up again. You may not want to use your hands when you're speaking, because if you got shitty internet, then it's like really bad. It's like, you know what I'm saying? Try to put you're not Italian, so you could actually put your hands under your ass and still speak. If I did that, of course, I wouldn't be able to speak.
Can you hear me?
Not really. No, we can't really hear you, but why don't you try to log back in, and John and I will pitch in.
All right, we're going to dive into another piece of news before we let Brett come in and give his expose on Bitcoin mining difficulty adjustments. But we saw Steve Cohen, your good friend Anthony, just announced that Point72 is looking to hire a head of crypto. Soros Fund Management, obviously headed by George Soros, decided to dive in to actively trading crypto. Do you think it's just a matter of time before almost every large hedge fund is now involved? I mean, if you go through the list of names, you have Dan Loeb, Stan Druckenmiller, Bill Miller. You have a variety of the top investment managers in the world. Do you think it's a matter of time, or what are you hearing from the hedge fund and investment community?
Well, I think it's important to understand why they're getting involved. So the short answer to your question is yes. I think any person, and I said this morning on CNBC, any person that does a deep dive analysis of the Bitcoin ecosystem, the network effects of Bitcoin, Ethereum, and some of the other tokens recognizes that these are here to stay. It recognizes that there's a big digital component to our lives now, whether it's through the NFTs or just the deployment and the effectuation of a decentralized financial network. So for all of those reasons, the more homework that you do, the smarter you are. It would be the same way if someone looking at the airplanes taking off in 1917 saying, okay, well, that's obviously a fad. It'll never turn into any commercial traffic or won't be deployed for the military. And yet the more homework you did, you recognize, okay, there's going to be huge markets for both of those things. Decentralized finance is here. Bitcoin represents that. It's a huge anchor. And so therefore, every one of those hedge fund managers is learning about it and scaling into it. I don't think they're going to take Charlie Munger's approach and call it like a scourge on the civilization. I do believe that they're going to eventually all be a part of it. Brett, are you back?
Yeah, because I'm now using.
Are you going to start speaking like a Godzilla movie?
No.
I'm all right now, or what? Okay.
I'm off of Wi-Fi. I'm using Verizon because this shows. I think we started out sounding like Wayne's World. We have the technology of Wayne's World.
Well, somebody asked if you were using a dial-up modem, and of course, I said that you were from 1991. That person happened to be Steve Case, the founder of AOL, that asked that question. But that's
all right. We're going to go take two here for the sake of the podcast. Brett, tell us about the Bitcoin mining adjustment that happened this week and why it's significant.
All right, so I'll just summarize it. I am using my hands. So 50% of the miners essentially were shut off overnight. And so, what the network did through this difficulty adjustment is essentially made the math problems easier so that the network has worked completely fine and seamlessly, despite the fact that you've lost half of the computing power. There's really not another network probably in the world that could take that kind of a shock to the system. Look, I think the primary takeaway, which I think we've discussed, is just how bullish this basically state attack by China on Bitcoin is for Bitcoin. You've shown incredible resiliency of the network where you can shut off half of it and the network just keeps moving along. And by the way, all that mining capacity that was shut down in China is going to get dispersed throughout the world. And so you're going to end up with a much more decentralized network. You're going to kill the China controls Bitcoin narrative. You're going to kill the what about a 51% attack narrative? And Bitcoin's going to get greener. And so it's incredibly bullish. But I think in my estimation, I think the difficulty adjustment is going to basically put in a bottom here for Bitcoin. And I think, again, it just shows how resilient and really brilliantly designed the network is.
Yeah, I remember.
I just want to add something.
Go ahead, Anthony.
Miner revenue has increased by 50% in the last 4 days since the record difficulty adjustment downward. This is a record adjustment downward. The revenues have gone up. And to what Brett is saying, this is one of the more brilliant aspects of it. This is another reason why Bitcoin has remained so resilient and anti-fragile during this period of time.
Right. And I remember, Brett, when Bitcoin was trading above 60,000 or in the high 50s, and there was this barrage of amazing news when it comes to network adoption and participation, and it was struggling to go higher. I remember you said to me, it's really, from a trader's perspective, not trading well. Today, we're getting this barrage of negative news from China. More than half of global Bitcoin mining emanated from China. They have aggressively cracked down on that. The mining hash rate has gone down significantly, but at the same time, Bitcoin has continued to hold in here sort of in the mid 30s. Would you characterize that as sort of flipping it on its head from what it was, when it was in its 50s, not going up on good news? Now it's not going down on bad news?
100%. I mean, if you look at what has been thrown at Bitcoin in the last 5-6 weeks, it's really incredible. As I said, you had a state attack, right, by, the sort of what had become a bit of certainly the home of Bitcoin mining. You've had the ESG arguments. You had, congressional hearings, Elizabeth Warren. You have Binance, encountering regulatory difficulties in few nations where it's operating without proper regulation. And it's not going down anymore. No, I think this is, I think it's a very bullish sign, but I do have actually some, quote, inside information to add. So I actually talked today with one of the large institutional traders of Bitcoin, and they were talking about, as we have on this call, the show frequently, how nascent we still are, how early it is. And he says we're not even in the first inning. We've also in a number of institutions, whether they be insurance companies or endowments that have allocated to Bitcoin. What they said, this trading firm, institutions sort of buy the dip. So insurance endowments that had positions, if it was in an equity market situation and the equity market came down by 40, 50%, they would add. They're not adding. Now, they're not selling, but they're not adding. And again, I think that speaks to that. A year or two ago, there was career risk for an investment professional to buy Bitcoin. I think that career risk is dissipating quickly, but it's just still early. And I think the other thing that we're all experiencing is that when Bitcoin declines, I think there's a violence to it that people have to adjust to. And that violence brings a bit of fear. You don't have like, I'm buying it at this EBITDA level, or if this stock gets to this PE, I'll buy it. You don't have that sort of traditional valuation framework to sort of serve as, an entry point, if you will. So I thought that was an interesting insight that none of their large institutions were adding, but none were selling either. So I guess they're true hodlers.
Anthony, I want to turn to a different topic that we covered sort of as the lead story in the newsletter this week, and that's related to NYDIG. So just for full transparency, we have a business relationship with NYDIG that Anthony can talk about. But while there's been a lot of headlines, both negative and positive, for Bitcoin over the last 6 weeks, NYDIG continues to plug away with a lot of these sort of enterprise level partnerships that they've struck to enable more accounts, more consumers in the United States to have the ability to buy, hold, and sell Bitcoin natively in their brokerage accounts or payment processor accounts and things of that nature. They struck 2 more of those in between last week's newsletter and this week's newsletter in the last week. One is with Q2, which is it's a strategic partnership with a group that is involved in mobile payments. Another one was with Fiserv previously, and then another one this week with NCR, which is going to enable Bitcoin service for up to 650 banks, up to 24 million customers that are customers of those banks. How significant is quietly what NYDIG is doing with all these partnerships relative to some of the headline noise that we're seeing?
Well, I think it goes to what Brett was saying, that the news in the last 6 months, you could put the ledger together. There's been some damaging news that's impacted Bitcoin. Bitcoin has demonstrated anti-fragility, but under the surface, there's also been a stream of super positive news. More and more funds adopting it, more and more sophisticated hedge fund managers and institutional investors entering the space. And I think what you're learning from Ross Stevens and NYDIG, they have a very long-term strategic vision and passionate conviction related to where Bitcoin is going. And so they want to be part of the pipes and plumbing of Bitcoin. Now, that we have this unit investment trust, this First Trust SkyBridge digital innovation portfolio. And it's companies like NYDIG, who unfortunately are private right now, that I would love to own a piece of in that portfolio, because Ross and his team are unstinting in terms of their long-term forward vision of where this space is going to be and how prepared they are to be in the space. So all the stuff that they did this week is evidence of that, John.
Brett, you have anything to add about NYDIG's approach?
No, look, I think what they're doing is great. Here's where I think the significance comes in. And, I'm coming to you from Los Angeles, and I spent July 4th out here. And, from a Bitcoin adoption standpoint, I would say Los Angeles is pretty far behind. You have more sophisticated financial investors in New York. You have more sophisticated tech investors in San Francisco. And so, I'm wearing a Bitcoin hat. I wore it on July 4th. and I had a fair number of Bitcoin questions. And what people often say is, all right, well, if I want to buy it, where do I buy it? And I tell them where they can buy it. But if I could tell them, just call your bank, right? Your bank, you can buy it into your bank account. I think there's a subset of those people that would do it. They're not going to open a Coinbase account. Buying a couple grand on PayPal isn't that interesting to them. They'd be interested in getting involved, but only if it sits in the existing sort of ecosystem of accounts that they have. And so what NYDIG's doing, I think, is powering those accounts, and I think ultimately that's going to facilitate adoption. And as Anthony was sort of suggesting, it's a long-term play. It's not, I don't think NYDIG's going to like turn a light switch and we're going to see massive inflows, but they're laying this plumbing, which I think is incredibly important.
Right. And one of the things we pride ourselves on this show and in our newsletter is providing balance, when it comes to sharing news and discussing news about Bitcoin. And certainly one of the primary criticisms of Bitcoin is its use in illicit finance, scams. Mt. Gox early in the life of Bitcoin was a high-profile incident of criminals hacking that exchange and absconding with money from that exchange. And you've had a couple of incidents recently. Anthony, I'll start with you on this one. Brazil's Bitcoin Banco group, the leaders of that group have basically absconded with about $300 million worth of Bitcoin. And they were arrested by 90 federal officers down in Brazil after a 3-year investigation. That comes on the heels of a $3.6 billion disappearance from South Africa's largest crypto exchange called AfriCrypt. That those leaders of that crypto exchange are still on the loose. How concerned are you about those incidents, the incidents themselves, and also the PR that comes along with that as different countries and different institutions contemplate regulation and potential adoption at the institutional level?
Well, listen, I mean, who's getting who? The PR related to that stuff slows down adoption. The PR, whether it's true or false, related to Bitcoin and the environment, slows down adoption. The fact that ransomware, even though the FBI was successful in the Colonial Pipeline ransomware transaction in finding the email traffic among the hackers and identifying the keys and getting the Bitcoin is problematic. At least it's more accurate. But at the end of the day, all of this sort of FUD slows down the adoption of Bitcoin. I don't think that the exchanges that you're referencing are the institutional choice exchanges. As you know, we use Coinbase Pro for our funds. We use Fidelity for our funds. We use NYDIG, and we're not set up on those funds. And I would just caution people to try to stick to the upper echelon of best practices in crypto. Still very, very early innings, John. And yes, those things do hurt from an adoption standpoint.
Yeah, and the last piece we covered too in the newsletter is that SoftBank, despite the issues in Brazil with the Bitcoin Banco group, SoftBank just invested $200 million in a Brazilian crypto exchange called Mercado Bitcoin. It was their Series B round. It was the largest Series B round in the history of Latin America. So think about that for a second. This nascent asset class, exchange that's operating in that asset class, garnered the largest Series B in the history of Latin America. Mercado Bitcoin is planning through either acquisitions or organic growth to grow through Central America and Latin America in places like Argentina, Chile, and others as Bitcoin regulation continues to evolve. So it didn't discourage SoftBank, one of the largest venture capital firms in the world, from investing $200 million into a Brazilian-based Bitcoin exchange. It just goes to show you that there's good players and there's more nefarious players in this space, and it's very important to understand who you're doing business with.
Well, not to interrupt you, just think of the valuation improvement of things like BlockFi, Kraken, Coinbase, Binance, any of the major players that have proven to be very tough and secure from a hacking perspective. Look at their valuation metrics. And so I would just tell people, if you're in the space, go with the highest quality names.
Let's talk about BlockFi for a second. We had Zach Prince, who is the CEO, co-founder of BlockFi, on a Salt Talk this week. He was very impressive, talking about BlockFi's business model as a crypto lender and different business lines that they could build from there. They also just basically opened up the waiting list for their Bitcoin rewards credit card. So there was a massive waiting list. It's the first true Bitcoin rewards credit card in partnership with Visa. So basically you have anybody who gets this credit card, which there's, I think, hundreds of thousands of people in line for it. When they spend dollars, they get cash back in the form of Bitcoin, 1.5% cash reward. So what are the implications, first of all, of that credit card reward program coming online in terms of driving retail adoption? And what did you learn about BlockFi that you thought was interesting?
Well, I mean, there's so many different things. I would just encourage people to listen to that interview. I sat with Jeff Bezos in 1999. And Zach Prince reminds me of a young Jeff Bezos in terms of his intensity of focus, his understanding of his core business, and his relentlessness. And remember, Amazon almost was called relentless.com. In fact, if you go to relentless.com, it takes you to the Amazon page because it was originally supposed to be called that. So Zach is a relentless guy. And basically what he's telling you is the market is so immature that there's no lending facilities available by and large for cryptocurrencies like Bitcoin. And if you look at the rates and the spreads and the fees for storage and the margin activity at a place like BlockFi, they're literally a money printing press. Like the Federal Reserve in some ways, John. I mean, in the month of May, the entire crypto market was down roughly 50-ish%. BlockFi printed $61 million in revenue. So I don't know if I'm allowed to say this or not, but Dan Loeb, who's a partner of ours, we got a ton of money with Dan, several $100 million, spoke to him over the weekend. He's leading the round on BlockFi. He thinks it's a 4 to 5 bagger from here. And so to me, I'm super excited for Zach. I'm super excited for his team. I'm going to give a shout out to Anthony Pompliano, who introduced us, frankly, to BlockFi. But I just want you to think of the power and the idea. The idea is an old idea. You put money on deposit with us. It happens to be in Bitcoin. You can get yield on that money. And oh, by the way, the reason why you're able to get yield on that money are people that want to borrow that Bitcoin from you. And so that spread and the security and the integrity of that process, I think, is really the main business protocol for BlockFi. So we're super excited to be a part of it.
Brett, we have a question from the audience, and we talked about this with Vijay Boyapati a few weeks ago, and he joined us as a guest, but I want your take on it. It's from Steven in the chat. Why do you think the Chinese Communist Party so aggressively did a 180 on its attitude towards Bitcoin? You know, they had banned it twice before, including in 2017, but they hadn't fully cracked down, especially on mining. You know, it's evidenced by the fact that somewhere around 60% of global hash rate was emanating from China. Why do you think they're so aggressively cracking down on it now?
Well, I wouldn't say with respect that they've made a 180. I mean, they've banned it a couple times, and so now they're broadening the ban and actually enforcing it in a meaningful way. But I think you have to place this into a larger context, right? Which is, they pulled the Alibaba IPO, days before it priced, right? Which was an incredible thing to do. Didi just went public, and they're clamping down on it. That's down like 25% since it went public. It's their Uber. They are going after large tech businesses, of which Bitcoin is one. So, I think everyone in Bitcoin, and I love this about the Bitcoin community, takes things so personally, almost, and I don't think this is about Bitcoin. I think this is it's a closed society, and Bitcoin is about openness. And ultimately, I think it's about controlling capital flows. They don't want money flowing out. They want to control the money. They want to control the information. Money and information equal power. I think it's, again, I think you have to look at it in this broader mosaic.
Yeah. Anthony, why don't you sort of rehash what you spoke about on CNBC this morning? You did an appearance where you talked about both Didi's, the decision from the Chinese government to remove Didi from the App Store because they didn't hold their IPO on the shelf until there was a cybersecurity review. Basically, there's just an obsession in China with data, as Brett alluded to, about controlling data and maintaining their grip on on power in every aspect of society? And also, what are the implications of that related to their decision on Bitcoin, Anthony?
Well, I mean, the first thing is if the Chinese government and the regulators are asking you to delay your IPO and you elect to not to delay your IPO, there's monumental consequences. And so they're letting you know if Jack Ma can disappear for many months and then reappear after paying billions of fines and effectively be neutered or spayed by the Chinese government, they're letting you know that they're in control. They're letting you know that the nationalistic tendency to put a dome over China and to control information and assets. Remember, you gain your wealth in China. It's very hard to move assets out of China because of capital restrictions. So imagine Bitcoin. You convert your Chinese wealth into Bitcoin and you move it instantaneously to a bank in the West. This is a big no-no for China. So there's no question in my mind, the same way that they banned 2/3 of Google, almost all of Facebook for a period of time. They've got, Apple on its knees, often at times begging for forgiveness. Tim Cook, I think, has given at least 2 John Cena Fast and Furious-like apologies to the Chinese Communist Party for Apple's quote-unquote misdeeds in China, is telling you that there's something going on in the Chinese leadership where there's an insecurity there related to data. There's an insecurity related to the sharing of data with the United States. And there's an insecurity related to capital migration. The last time I saw this was in the 80s. In 1961, Khrushchev demanded that the East German government build a wall to separate the Russian East German side of Berlin from the West, which was the French, British, and West Germany and American side of Berlin. And they built that wall and they tried to hold people in the system. And so the Chinese, by their actions, are building a metaphorical Berlin Wall, if you will, in terms of the suppression of data, information, the suppression of capital. How long will that last? God only knows, but that tells you that there's deepening insecurity inside the Politburo there about their control over the country.
Right. The last piece I want to ask you about, Brett, I don't know if you've looked at it closely, is Barclays, the largest bank in the UK. They're blocking customers now from sending money to Binance. They can still withdraw money from Binance, but it was essentially, they interpreted a ruling from the UK Financial Conduct Authority to basically say that Binance is not allowed to engage in regulated activities in the country. Are you worried about further crackdowns in places like the UK? And what's your current outlook, if it's changed at all in the last month, on the regulatory situation in the U.S.?
No, and I think this ties to the earlier stories we discussed about Brazil and South Africa. Like, we want good regulation, right? We want these companies to be properly regulated, and we want people that make money in crypto to pay their taxes, right? Because that'll make the government happy. Binance has built, it's an incredible business, but they have played a little bit of regulatory arbitrage. I don't think there's a lot of surprise that they're running into regulatory enforcement in some jurisdictions. What they've done in the U.S. seems great. They hired Brian Brooks, who was, the former U.S. comptroller. He's the CEO of, Binance US, and he's looking to build a fully compliant U.S. subsidiary. And I think they're just going to have to do that in other markets as well. I think that, crypto broadly, Bitcoin has just gotten so big, the people want it, even as early as it is. And, governments are going to have to figure out a way to properly regulate it so that the citizens are protected. And that ties into, in the U.S., why we should have an ETF. A former CFTC commissioner today came out and said as much. In terms of the political environment here, I would say the thing that I find most concerning is that I think Bitcoin, and this shouldn't be surprising to anyone, is becoming politicized, like Mass did. And the progressive community is really anti-Bitcoin. Some of the things, whether it was Elizabeth Warren or Brad Sherman or Maxine Waters, what they're saying doesn't make any sense to me. I mean, Anthony and I discussed this. Elizabeth Warren has spent her career going after banks, and she's doing the bidding for the large banks, who are terrified of, crypto and fintech. So, I would say that that's the thing that concerns me a little bit is that Bitcoin is openness. And I think there's a big opportunity with China closing it down. Earlier in the year, Peter Thiel, was sort of saying, Bitcoin is a weapon of the Chinese. Well, they have unilaterally disarmed. And I think that creates an opportunity for us. And I think we as a community, and there are, Brian Armstrong and others who are lobbying and I think leading a charge to educate. We need to educate. I'm a Democrat. We need to educate the Democrats about, Bitcoin and why it's good for the people.
Well, Binance also just hired, I don't know if you know him, Brett, but Manny Alvarez, who ran California's Department of Financial Protection and Innovation, to work alongside Brian Brooks as they build out their U.S. business as well.
I don't know him, but I did see that. I thought that was great.
Yeah, and there was an article, Asher pointed this out in the chat in the Wall Street Journal this morning about the SEC and Gary Gensler taking a look, especially at stable coins as well as a source potential of regulation. I don't know if you caught that article, Brett, but it's basically regulators signaling they want more control over the crypto world for the sake of consumer protections. But it goes to reinforce your point about us welcoming regulation.
Yeah, again, I think if it's sort of smart regulation, look, you're going to have an increasing number of public companies. You have Coinbase, Robinhood filed their S1, something like 34% of their business. Was it 34 or 20%? Some substantial percentage, which I used to remember, is from crypto trading. And I think that's just going to keep going higher. They have however many users they have. I mean, it's just, it's finding its way into so many investors' portfolios that, again, I think we should have an ETF, and I think, the crypto exchanges should be regulated, and, there should be, the investor protection so people can more comfortably invest in the sector.
All right, we'll wrap it up there. I said we'd keep it at a crisp 30 or 35 minutes. It's 4:36.
Before you go, let's answer that one question about quantum computing, though, right?
Yeah, go ahead.
So just quickly, we really believe that on the quantum side, you have parallel tracking, or it's like a match sailing race. And so as quantum computing gets added to try to crack Bitcoin, there will be quantum computing on the side of protection of Bitcoin in the nodes. So we don't see that as a super threat. I know that's been discussed by people, but I don't see that as a risk. Brett, do you want to add anything before we chime out?
No, I mean, I like you, but we've spoken to people who I think are a lot smarter than us on this issue and come away, comforted that, again, there's the match sailing and just the decentralization of Bitcoin, makes it sort of a uniquely challenging target.
All right.
Over to you, John Darcy.
Well, there you have it. We'll wrap it up. Thank you, everybody, for tuning in to this week's SkyBridge Bitcoin Review. It's great to have the full band back together with Anthony and Brett. And we'll look forward to doing a few more of these before the summer's out, as well as welcoming a few guests. And as always, we have a few great crypto salt talks coming up in the next several weeks, including we're taping with Robert Breedlove, who you might be familiar with his podcast if you're involved in the crypto world, but would highly recommend that. And also, we hope to see you in September. I have to plug our SALT conference. We'll be returning with SALT in person in New York, September 13th to the 15th. We have FTX, NYDIG, Coinbase, BlockFi, basically a who's who of the crypto.
SkyBridge Capital.
SkyBridge Capital, of course.
In our digital team.
Will be there. So it's going to be a who's who of people in the crypto world, as well as titans of the hedge fund community, Steve Cohen, Dan Loeb, Kathy Wood, going to be speaking as well. So it's going to be a fantastic event.
The chain smokers
are going to be performing. If you're into that type of thing, they're also into NFTs. So we would love to see you in person in September. If you are so inclined, it's going to be a beautiful time of year.
We may even have our own NFT, by the way, John. We may even have our own NFT before this is over.
Maybe we will. You never know.
Maybe we will.
But thank you, everybody, for tuning in this week to the SkyBridge Bitcoin Review. We'll see you back here again next week.